Talk to me honestly. I'm here. I'm here. I've been so far away. I don't know when I changed. Your voice replaying.
What's up, everybody? Good morning. Big day today. We got Microsoft and Google earnings, aftermarket, consumer confidence numbers come out in about 40 minutes. Been kind of slowly trending down overnight, and VIX has been flat for a week. So market's just stuck and waiting for something to trigger it. It'd be nice to see like a giant red sell-off day to continue the squeeze. We're not going to see the big move, I think, until earnings today, but we might see a couple of moves. The consumer confidence can trigger something. It's interesting to see if there is any kind of stimulated move before earnings come up, right? So let's kind of get ahead of this and see what we think. Earnings have been beats almost across the board, all sectors. So far, everything's looking fantastic, and the market still isn't rallying. I think Wall Street has priced in that idea that we've been trimming the fat and that companies' bottom lines would be better, which is true. And it's already priced in, so the reason we're not moving. We need some surprises. The short squeeze is still catalyzing the move up, but there's not really a deterioration of that these short positions till after this week. So people are short, hanging in through earnings. The earnings doesn't give them what they want. They'll squeeze within a couple of days for sure. We're going to look at that. We're going to watch that DD number and keep everything the way we've been doing it. Market starts in 9 minutes. And get ready to get started. Hit that like button.
We were good, we were gold, kind of dream that can't be sold. We were right.
Good morning, everybody. How would you use this tool for Asia and European markets? The data feeds we have are for US markets. However, did it turn into a Miley Cyrus video after the other video finished playing? YouTube recommended I was wondering, I hear Miley Cyrus in the background. There we go. So what you can do is towards the tail end of European markets, right? European markets are closing in about 2 hours. So our markets open can help pivot your close. So essentially, if you can see where we are pivoted. Example, if your market's been selling and selling and selling, US markets about to hit hedge pressure. Typically, futures markets can react to each other. So that's one way to do it. So our open helps dictate your close a little bit in Europe. In Asian markets, we have an overnight dynamic hedge pressure that allows us to estimate pivots, hedge pressures to pivot off of overnight for the next morning. And so we have major futures has a dynamic hedge pressure bot that prints in our Discord numbers for the overnight, which helps with the Asian European sessions. Both will open during our overnight. What was that song? Which one? The song I opened with? Or the Miley Cyrus song? Which one do you want? But it should be in Discord. I'll send it to you. I don't know. After the song, YouTube just switched to another video. Miley Cyrus Flowers official music video. Sounded catchy. The song I use at the opening stream is called I'm Here by an artist named Puppet. We currently are above triple V. This is the last one. The May one is right here. So the market still isn't finding that nice volatile crunch, or sorry, volatility crunch, where VIX just collapses down below triple V. It's still hanging tight because of earnings. So this one, while we found in our research, they have month to month. Like this one is from March, and they're still pivoting action off of it. Interestingly enough, it just shows that long-term effect from that long-term hedging. You'll see that. And this isn't really the active pivot for the month. This is the one right here we want to look at. So I'm gonna see like a really good solid day or two where this at least tests through there. We're gonna need to break out of this S&P range though. Being up here though, again, trading small. The potential for volatility explosion is big. Obviously, the contango is set for it to be correct. You can see that there's a lot of, we closed at about 17, and VIX futures the next month is rolling up closer to 20. So what does that mean? It means the market anticipated future volatility and earnings. And when we got there, the market hasn't not been volatile, but it hasn't gotten more volatile. It's been choppy and flat in big ranges. We've been having 20, 30 point dips and rips almost every single day. That's that volatility. But the market's not doing anything as far as breaking out and condensing that volatility or collapsing and enhancing it. It is just maintaining volatility. And you can see that the bull side still holds per week. Bull side is strong and bear side is just absolutely rapidly deteriorating. The bear side being lower and lower and lower is deteriorating. The bears are getting squeezed. I'm talking to my team right now about making the automated Discord bot. We're going to build the bot from scratch. And the bot is going to do all kind of Discord features. The first thing is going to manage logins. So what you guys will notice with it is that when you sign up for a Rocket Scooter, you'll automatically get thrown in the right Discord roles. That's easy. Other things will be to incorporate platform server information to Discord, alerts, Discord connectivity, anything like that. Like you go to Discord and type in !SPY, and it would type in the hedge pressure and spit it back out at you. Things like that. We're gonna write the most sophisticated trading bot Discord's ever seen to connect to our platform to collect any alerts. So any alerts or any indications that get put into our platform, especially by future vendors, will have the ability to send Discord alerts and text alerts. Oh, so there's a bug in monthly map when you hit it. You have to like wiggle the something is not driving with the auto scale. They're working on it. You have to just, I just move my mouse wheel and it pops up. It was really hard for us to get monthly maps to work. So there's a couple of bugs still there. There's a lot of draw issues with how far you can expand into the future here in this charting library. But if you look at it and it doesn't pop up, just grab the axis and move it, or use your mouse wheel and it pops up. Okay, market's opening in 1 minute. It's ready to go. I took a loss yesterday in the 10K account. It was only like 1,300 bucks, wasn't much. Let's go, let's go, let's go. We are gapping. Let's go S&P really quick. Gapping down. It's good. Let's take a look at resilience out the door. Resilience positive, looking good. Let's see if it hangs there. Remember, we have consumer confidence numbers coming up pretty soon. 53 and 36. That's not bad. Okay, let's take a look at the data we got coming through here. Just gonna analyze here really quick. Also gapping down. I think good resiliences are positive. That's great. You also have a couple fixes coming in as far as like the recent data draw out, like the data outages we had from drawing features. There's a limitation or a bug that came out in our platform. Wait for those monthlies to come through. Take a look. Cool, we got our first prints here. SPY is, let me refresh. Pop on here. This is going to be one of those days. If we break through 411, it's going to be pretty quick. This could be another 20-point lift in the S&P, which again, I just trade in and trade out. Volatility's been kind of static and sitting in the same spot. You know, it's going to be volatile V-shaped moves. I don't want to take anything too heavy, especially with the catalyst coming in. Consumer confidence comes in about 30 minutes. That's one of the bigger numbers we're going to see leading into this this earnings day. And so just keep in mind that that's one of the things we're looking for. The DD number, we're waiting for that to be calculated. Looks like we're getting some of that rolling in right now. But in the meantime, just keep an eye on SPY 411. This is we call it a bear short up. And oh, here it is. The numbers just rolled in on Rocket Scooter. So what it is, we're in the bear zone is the top at 412 in SPY. And relative to kind of like where we're going, let me refresh this. There's going to be essentially probably a nice little V-shaped move. I think if we catalyzed off of this event this morning, I'd like to see a good little rip, but with resilience being positive, we're probably gonna fill the gap, which I like. So that's a good setup today. Nothing looks alarming. No irrational signals yet. Everything's clean, and I think they're just, all ears are just perked to see how that report comes out in a little bit. So, the monthly map, as Ashton said, is a fantastic tool. The tool we made projects into the future, and the first to do this with options. So normally everyone looks at options flow and order flow. It's kind of the popular thing in the last 5 years. What we do is we get ahead of order flow and we come in advance. So we will predict where levels that will have order flow before the unusual flow shows up in monthly maps, projects that same thing into the future by all options available, any date that you have expiration for. We can analyze it for potential flow in the future. So we look at that to see how the positions are set up to last and survive. And through the next week, you can see that in QQQ and SPY, the bulls positions are holding strong and even getting stronger, and the bears are actually deteriorating and weakening. So bears are escaping. Their short positions are being squeezed out of their short positions, and if earnings doesn't prove to turn the market around, their squeeze is going to pick up after this week. And I think Ashton saw it as well, that the bear zones are just rapidly getting lower and lower and lower, which means people have to have the market fall lower to be short, or they're getting out of their short risk between those date points. So looking good. The market's confidence is still there. DD coming in 0.8 right now, so I'm looking for that 413 possible top in S&P. Nasdaq 315 is hedge pressure, so there's gonna be a little bit of resistance as it fights there, but that resilience number is strong enough, I think, that we will break through and push through that gap. And QQQ has as high as a 318 today if that holds. So interesting day. Let's everyone kind of just chill until 9 o'clock or 10 o'clock when that report comes out. Are y'all making any trades at the open? I do like what I see, y'all. All right, we do have data somewhere. There it is, 300. Yeah. Let's get our DD bands right here. So if no irrational signals, the DD roll is probably going to be in effect, which is good. We're near the lower band. The upper band is like way up here somewhere. I'll have to adjust it whenever we get there. I kind of do like what I see. That res is nice and strong. We have a catalyst coming up, so I can't play it with this. I'm still fighting that, waiting for that really big play to come in and get a good hit on it. If we'd have a catalyst, I would totally long right here to bet that we do push to the upper side of the gap. And we'll see. So whenever the consumer confidence comes out, market's going to move any direction here. There's no MHP on your SPY chart. It's somewhere. If we have an up, it's 395. Just scroll down. Turn on your auto scaling. It's there. These conditions is half gap resistance is something you expect a full gap closure. So the way resilience works. Hold on. Res is greater than 0. It's like that. And res is less than 0. It's like that. So they're both really strong, and so the gap fill potential is really good. With the catalyst, though, an event possible turning into a catalyst, we have to be careful, as that can pivot the market in any random direction, despite the indications. So DD today is hinting at the bull zone. Right? So DD, as long as you maintain DD, it looks good. You also have a DD band way up here, which can continue to propagate through the bull zone for the rest of the day. So we could have one of those days where the market just, if we get lucky, right? And consumer confidence does this, and then we kind of push higher and higher and higher. And then earnings, come through here and then pop up at earnings. That would be something that would not surprise me. It's not going to be a fast-moving day. But there's really little area. So another thing is that you guys know this roll, right? We have the DD band roll. Wherever that lower band is, I would say like right in here. The market's not going to want to touch that lower band as long as markets are rational and your DD is bullish. So if it dips on that consumer confidence, I'm going to grab this dip right here to trade it back to something, either here, if res is less than 0, or if res is greater than 0 to there. Okay, so small long right here, and then grab those dips to push. So if DD Res is less bullish, would you look into short or touch HP? I never short against HP personally. I only will trade short on HP breaks if there's room for it to fall to something. I find every excuse to look for a bull trade if it's there. The only time I short, personally, now again, it's not a rule we teach you guys, but personally for me, for a one trade a day philosophy, you're better off trying to find longs and sitting out there, not there. Not that that's advice for you guys. It doesn't mean I'm always bullish to the market. It means longs are easier to trade and easier to manage and easier to find and less volatile, so you have less drawdown. And you have green candle every other day. You have a red candle. If you count all the candles in any recession, you're gonna see it's about 1-to-1 ratio. So trying to short for a big collapse is just a fool's errand. It's the newbiest thing to do. So I very rarely look to short. The market needs to be distinctively bearish for me to want to be short. And I only short against MHP, those pivots from the bottom right here. I don't try to fade anything or scalp short. If I scalp anything, I'm going to scalp long. And it pays off. It always has. For sure. For me. How do I determine the green line? The bots in Discord will do it, and then we convert it. There's a channel in Discord that'll convert it for you. I just estimate about where they are. I'm watching them on another screen, which is up here. I'm watching where they're located. Oh yeah, everything looks good today, long and strong again. And so like, there are some really good liquidity map shorts that I do take, like BLDs with, I like number 2, I'll take. Number 2, I'll take. Number 3, I'll rarely take. Unless it's just gross. I very rarely short against hedge pressure. It's available. I would rather like let it chop through here and then take the MHP break leg is stronger. So MHP is more of the pivot that I like to take on the bear side because you'll start squeezing lots of bulls on MHP break. So it gets really nasty when you do fall. So anything that, like, if one breaks below, it's a collapse, I'll short that. Bouncing against that's a collapse. Bouncing into the collapse, I'll take that short or short against it. Same way. This one, usually these days when you have like a bear short down that breaks up and hits that put wall resistance. Well, I guess when I was before I switched to like one trade a day, maybe I might short from there to there, like the end of the day sell off or whatever. But it's just rare. While they are viable pivots, it's so much harder, even in a bear market, for markets to fall because there's always buyers there. You have a great question. Take a look at UVXY. Let's go. Spy hedge pressure break to the upside. I do like what I see. UVXY is great. Nothing alarming here. Nothing in the way. Anytime an event happens, the market can change on a dime, and it will pretty much, we ignore signals from anything when events come out. So if the market comes out and it's bearish, the market starts selling randomly, it can, thwart anybody's signal. So no matter what you do, if it's rocket scooter or technical analysis, events, I tend to like play like very, very mild. So I'm not like jumping in on my full position. What I am is in a small starter position. and trading very small, just in case I get a dip. There's a rule that we have, the DD bands rule, that states that it's an overnight futures thing, that there's a support closer to like the 409.5-ish area. On futures, it's about 41.26. That is probably going to support even if there's a pretty big dip off of this news report. So what I'm going to do is get in a small starter position now because things look great. The report goes my way, great. The report doesn't go my way, I'm going to have a stop below that level I just mentioned, about 41.26. And I'm actually going to load up on the dip just to get a better cost basis. So normally when I trade around events, I usually teach people to sit out. You're kind of playing a coin flip. But if you do have a good risk to reward, looking at the whole map right now, the S&P can go as high as 413 or higher if DD keeps going strong. So, it's enough for me to go in for a 20-point run with about a, 15 or less point stop, and I'll dive in at the bottom with a bigger position. So right now, there's nothing really to analyze other than we got to wait for those numbers to come out. It's a pretty big indication of what's coming forward as people are getting laid off. It's less money being spent on things, and that these numbers are going to be a very good reflection of that, although there's a little bit of a delay in it. But even so, I like what I see. This DD number is a ratio of the amount of stock that's bullish, the market cap that's bullish versus the total bullish and bearish, and it's been the 80s and 90s% for the last couple of weeks, and this is a really strong metric of supporting the short squeeze that we have. So I'm pretty confident that we're not gonna see any I don't know. I could be wrong, but I'm very confident we're not going to see just the market collapse from here. That short squeeze potential is just so powerful, and I think Ashton and all the other folks here have been seeing it and talking about it every day. So we'll have to see. And then, of course, after about an hour, this consumer confidence number is going to ward off. People are going to immediately start positioning for today's big earnings after market. So we have Microsoft, Google, and Visa. Those are huge, biggest. It's the start of what I call big earnings. So we'll have to see how that plays out today too. But all signs look great, and just kind of taking it easy till this report comes out. Stream is streaming. Stream down? No, we're here. Okay, let's take a look and get a read on this really quick. Right here. Okay. That was very odd for right now. That's a very, very, very odd candle. And a lot of volume. S&P futures came in about 17, 18K right there. That consumer confidence number didn't even come out. Thank God I didn't buy anything yet. I didn't run the DD bot in Discord this morning. Let me run it real quick. I can't run it. I rebooted my computer. I have to load everything back up, and they have a conversion channel that does it though. Conversion channel. Some of the folks there do it. I think Nick does it. It's 4:15:54. Wait, no, hold on. No, 4:09:39. Right about here. So there's a channel. Our Pro Plus members have access to a conversion channel. If you guys want to upgrade to the Pro Plus, there's a channel that does it for you. Some members volunteered to do that. Give or take about right there. Keep an eye on these numbers here. kind of like. Yeah, AJ's talking about the same strat. I think he's waiting to see that data come out. Things look positive. These are a little pre-positioning at the start of the day. Let's look at QQQ, find any resilience is there. That's not the correct spot for Qs. Qs is going to be right at 312.98. Of all, I guess not of our tools, but of our pivoting indications. So you'll hear, if those of you that are new to the space, you'll hear DD, resilience, and liquidity maps or hedge pressure mentioned a lot. And DD is the purest of bull and bear bias, and it's by far probably, I'm not gonna lie, I'm very proud of what we made. It's probably one of the best tools invented for trading. It shows you the purest sentiment right now at the open of the market of everybody's actual institutional positions, where they're bullish, where they're bearish. That's it. And it also updates throughout the day as we monitor the order flow. So as that DD, as you see, the number being 85%, it says that the SPY while trading down is still hunting for a bull zone, which is actually higher than where we are. So DD tends to ultimately, most days, always win when the SPY, it's arbitrage between the actual SPY itself and the sum of the stocks, the aggregate of the market cap in the stocks. So all the stocks are pushing bullish, even though the SPY gap down. And they're going to snap back together at some point. And the only question is, do the stocks come down or does the SPY come up? And in most days when we're rational, the SPY usually tracks the stocks. It's very rare that SPY will get squeezed without the stocks coming with it. So if there's a quick dip on just the index products alone, people are getting squeezed out of them without really reflecting the stocks. And so DD indicates arbitrage, right? Where one thing's moving faster than the other. And the trade that I always take with it is that if DD's that strong, 85, like AJ said, I'm looking for a dip to throw in long for SPY to rip to 413 by the end of the day. Just for them to catch up. And with a really tight stop, I'll know if the other side is true, that the stocks are lagging the index and the index is getting squeezed first. So typically that's the rare case, and typically the stocks always move first. So in rational markets, it's pretty much always a bet I take. And right now, that number is just so strong. And as long as we get through the rest of the day and the rest of the week with that number being there, it still points to a still bullish stocks. And it's not like the market's bullish on fundamentals. It's more like shorts have been squeezed so hard that calls are in the money. It's forcing longer term call sellers to buy, to acquire shares for assignment. So they're floating the market even against bearish fundamentals. So it's kind of neat to see this mechanic. It's basically a bear trap. So bears are stuck and upside down. Let me teach you a little trick for that. So if resilience is negative and it's bouncing up and down like that, it means there's a heavy market cap stock right on the edge. So if you go to the scanner and you're looking for half gap break up, if you go to HG break up and just make a scanner just for that, you'll be able to watch which and sort by volume. You'll be able to see, or distance from half gap, you'll be able to see which of the big stocks it is right on the edge. So with it moving like that, always hints at the idea that there's one big stock, like an Apple or a Meta or something, sitting right on the half gap and triggering that. So I always put that front and center to look at it. So I'm going to make that scanner really quick and say distance from half gap. Let's see if anything's big. There's a Walmart there, Snap's there, Visa right on the edge. Visa has earnings today, so you can see that Visa's a big part of that, right? So easier, cool little trick. Oh yeah, actually, I just now saw that as well. Microsoft is the culprit. It is bouncing up and down on that half gap. Resilience is so sensitive to market cap and distance to half gap. So being right on the edge, like Ashton said, Microsoft just making tiny little moves is gonna drag that resilience all around. So I like that. Good find, you guys. It definitely is Microsoft today. Let's see what. Guys, smash that like button if you can. My friends. So we're going to take a look at Microsoft today. A little trick with resilience bouncing around right on the edge. That sensitivity is easy to see. You see it in NASDAQ and you see it in the S&P, right? So I can actually easily sort by that half gap breakdown to see what is the one that's pushing us lower and pushing around like this. And it's going to be Microsoft. You see that? Yeah, the bands are converted from ES. Is DD supposed to be one risk interval from yesterday's close? That's correct, but when you convert anything to something else, right? And SPY and the S&P don't necessarily tick for tick. The bands are going to move around in real time. If you have SPY bands, they're going to dance around because the ratio between SPY and S&P is never consistent. One goes slightly higher than the other all the time. So when you convert something that far away, it's just going to be noisy. So the bands are going to move around a little bit. So the ones on the futures are anchored. They're static. But if you're going to convert futures to SPY, just draw it on the same chart. You have to understand they will likely move, if that's what you're asking. Yeah, this was a really strange adjustment out of nowhere. I don't know. I can't really pinpoint why there would be such a shift other than just pre-positioning for earnings. Somebody's dumping something right now to get out of the way. That's just weird. I mean, maybe they know something about the consumer confidence and they just want to walk away from it. Maybe they know something about Visa earnings or Microsoft earnings and want to walk away from it. But to dump right now at this part means that they believe this is the high of the day, so that kind of scares me. Why'd there be some liquidation here? And I don't see any news. I've been looking for it. Anytime you see something move, that was earlier today. Yeah, nothing. New home sales as well. The forecast on that is really quick. It's a very unusual order flow for this part of the day. Wouldn't, as I think most of you that have been trading for a while will like concur with that. Take a look at what the sectors are set up to do today. Let's just look at the rotating. Energy is the weak spot today. Industrials, materials. Oh, good, good. Okay, so it looks like the weaker stocks today aren't going to be financials, tech, anything like that. So, interestingly, that the S&P would be the weaker of the two between that and Nasdaq. Russell's the one that's behaving the best today. That's a very much like the S&P. You have a lot of smaller cap energy and industrial stocks in that Russell that are keeping it floating. So I like to see that, you know, healthcare is a big part of the Nasdaq. So interesting to see that this is the spread day. The rotation is pretty much flat on things that have earnings, consumer discretionary, and here we go. Numbers are coming out. Let's go. What do we got? So interesting. Okay, let's get that refresh there. Consumer confidence. Let's go. All right, let's go. Numbers came out. Well, get that update. Okay, so the on the right. 101 on a 104 estimate. Okay, that's a miss, but we'll see if the market's going to respond to that. How's resilience doing? 9% new home sales. Oh, dude, that new home sales. Yeah, but that new home sales number, though, do y'all see at 9.6% on a 1.1 forecast? That's the big surprise there. Interesting. Sorry, Evan. That consumer confidence came in a weaker than expected, but these new home sales, that's 9%, almost 10%. Gosh, I'm looking back. It hasn't been that high since June of 2022. It was 10. The one time it broke 10% on the actual. So this is a big beat off not only the forecast, but off the previous week where the adjusted was minus 3.9% down. So that's almost a 12% delta between the 2 weeks. I mean, the two reports. Jaguar, what do you think about that? New home sales are up. Is this a fluke data point? Is there something mechanically going on? What do you think? It's just a relative change over last year. Month over month. March 683. Okay, let's take a look at this. Resiliences are pushing positive. I like that. Okay. Keep an eye on Microsoft today. Let me go to... Let's see how we react to that. I'm listening to Jaguar talk about the new home sales number. Am I trading Forex too? No, only trading futures right now. Financial juice throughout that consumer confidence number earlier, 954. Really? Was there a leak on that? It came out earlier? No way. I don't see it on mine. All right, Res is trying to fight. It's trying to get there, but it's not there yet. The S&P's not. It's not bullish enough, and we're not irrational, so this thing is clearly bearish. -3 is bearish. This is not good enough. Does Jason have Pro? I have the Pro, I believe. I think I have the Lifetime Pro. The data feeds wouldn't be any... They wouldn't purposefully slow down the data, I wouldn't think, and give you like a less speedy data if you didn't have Pro. I don't think that's the feature, but... The retail data feed is the retail data feed. There's no way it would come out sooner. Let's check Microsoft again. Watch on the edge. Microsoft doing good with resilience pulling back. Oh, okay, so we have other stocks pulling back now. Nvidia. Keep an eye on the tech. Another thing is staring at the number of tickers that are below the half gap as well. Seeing if more stocks are breaking down than breaking up. And actually, we can look at the, just go ahead and do below half gap instead. I see ones that are right on the edge. It didn't break through, but we can look at the distance here. And let's go ahead and add a custom range on that. Let's make these, like I always say, I like to eliminate the penny stocks from the list. Let's see. I need a filter in here that's like S&P only. That'd be great. Let me put in a ticket for that. How's I getting hit? Weird glitch in the matrix. Yeah, I know, right? Maybe that news popped up. Maybe that was an erroneous news feed that popped up. Maybe it was an accidental early leak and it did show up and then somebody deleted it, which caused that jolted the algorithms. Could have happened. A lot of times those reports are, you know, I mean, the data is known and it's, you know, not released. It can happen all the time. Decide which stocks to trade depending on which of the big four is rational. The big three. I decide which stocks I do want to trade based on a couple of factors. So I teach a whole class on that. One of the things I like to do is I like to find stocks that are lining up with the liquidity map on the SPY. That bear short up has that ability to have that hedge pressure to hedge pressure scalping. So I can go here in the scanner and I can sort by stocks that are also in that bear short up setup. Oops. And then I'll find a stock that has a healthy sector as well. So if I find something that's like around the edge of hedge pressure here, or monthly, or hedge pressure itself. You see XLF has a similar look to SPY. So financials today, I'll find a sector that looks the same. So I'll go find some financial stocks. Yeah, what's going on, Gab? Yes, sir. At the top of the space, I'm talking about the link that we have posted. Oh, well, the Rock Scooter Bootcamp is a trader training bootcamp designed by myself and Ashton Noland. Just hanging tight and waiting right now for that lower DD band. Here's that lower DD band trick. Let me get the S&P really quick, front and center. Right, ready for this? Ready for this? Okay, this is that rule. No irrational. DD's positive. We're getting really close to the band. If anything, it bounces from here. If anything, just keep in mind, half gap being resistance and lower open band being resistance might trade right back up to there, so be careful. All right, I'm gonna add in my bigger account. I'm gonna get that dip. You like that? Awesome, Beavis. Somebody sent me a message and said, BRSU, why did you not take the trade, or were you bullish because of that? So the idea is that when you open right here, open is always a resistance, right? So clearly in this setup, open, blue, open. This is the shorting pressure to open. The BRSU is not necessarily, it doesn't show that there could be an open price in between here. But anytime you short from something, it's true resistance, right? Now, while that was a potential short setup, I would only have shorted it from there to there anyway, so I don't take it. We don't use liquidity map until we have all signs the market's clear. This is like if the market has no pressure from an event, where does it move on its own with no human choices? Well, this is human choices, right? So you have to be very careful here. With an event coming up, I'm not trying to find a setup with liquidity map until after the event. Right? So now I'm looking to see, okay, what do we have now? We're bear short up. We're in between the two monthly hedge pressures, and we have that rule that markets are not rational and DD's positive. It's not going to want to touch that lower band. If it does, it's game over, right? When does one change bias to the short side? It's up to you. I only short off of something to something. If you were a bear, this is a resistance on a BRSU to short. Even though I don't take it, I only take high confidence setups that I want to take for my one trade a day. So BRSU has a resistance from blue, right? If I were to short, I don't flip to chase the short, Kevin. Answer your question. I short off of something to somewhere, like a short scalp from here to there, or a short scalp to the CD band, etc. When I take a trade on my funded, I don't, unless I have a clean, like in the funded, I don't take trades unless I'm very confident. I'm not. Well, I am confident that this probably holds for the day. In my big account, I just scooped up a lot right here just now. Yeah. As far as the funded account, I need to have all signs lined up and look pretty good. Resilience negative, which means this is resistance right now. Outside the box. DD positive means we're looking to go to 413. Hold on. So the DD or the index doesn't want to touch the lower band roll. Yeah, I like it. I like this. So when you, and another thing, Mark, I mean, Kevin, if you're trading fundamentally bearish, like not just trying to take a bear scalp, chasing any move, especially in a non-volatile environment like this, is suicide. Like this is just, a move like this could just be volatility and not really a bear sell-off. So like I don't chase and switch my bias because the market is selling a little bit. I try to see it before it happens and pivot off of something. So I short because I find something to short off of, not in a direction. I don't long because candles are green. I just long because candles are red, right? I always make sure that I trade from somewhere to somewhere. Important. So in a fundamental sense on the longer term, if you're bearish, what you want to do is you want to see something you're trading be below its monthly hedge pressure, which is a yellow line that's way down here right now on the S&P. So we're still way stuck up in bull territory on the longer term sense. So anytime, you know, as you progress through the month, which is third Friday to third Friday, this yellow line kind of approaches price and is closer. Anytime price breaks through it and goes the other way, that is a fundamental shift on longer term positions to bearish hedging structure, which means bearish. So keep that in mind. I only like to have a bear mindset when we're below monthly hedge pressure in general. And the bull mindset, I'm like, well, it can fall throughout this range, so I can actually long from here and still maintain a monthly structure that's bullish. So in a normal day, like if the market's falling and breaks through a monthly hedge pressure on any stock, then I'm more willing to chase the short on that rapid crash that can come from that. Anyone notice that past 2 days ago, it tapped the lower DD band perfectly and bounced? Yeah, and no irrational signs today either, right? These news reports this morning didn't really initiate a catalyst. I don't see any evidence of it. I'll have to double check though. Let me make sure I'm not missing anything. I'm gonna run on the futures really quick and take a look at this. Do I see any sign of a catalyst? I don't really see anything. Yeah, I don't see any evidence of a catalyst. Let's see if we ward off that lower band. Let's hang in there, baby. Let's go. All right. Right on the edge. Right on the edge. Right on the edge. Don't touch it. Don't touch it. Don't touch it. Let's go. Too scared to touch it on my on the funded account since it's right on the edge, but I'll take it in the big account for sure. I always take the same trades of both accounts if I do trade. I don't ever short one or long one. I don't do anything like that. If I'm long one, I want along the other. The only reason I can't do that here is because the account has stricter rules. So I limit myself to only certain longs or shorts. Because DD line, Brady, is not automated. It's something we manually do. And there's a bot in Discord that gives it to you. If you're in the Pro Plus, we have a Discord channel where they convert it for you. In the meantime, we need futures data to get automated. And right now we're working out our deal to get our futures data going through. So that'll be the next step to automate inside of Rocket Scooter. But until it's a manual calculation we do every month. If you are in the Rocket Scooter program, our team has a channel where they've made versions of the DD tool for Thinkorswim and for TradingView and for all the other platforms out there. Where you can just manually do it in Rocket Scooter. So every morning, if you don't care to do it, I'll do it for y'all. It's always in the stream.
It's Asana, your work manager. Bring together everything your team needs to get work done in one place. Visit asana.com to try for free.
Pressure. And the reason we have two different ones, we separate out monthly options from the weekly options for this reason. The majority of monthly options that are parked for long periods of time, especially a month or later, are large institutional positions that are holding stocks for months and quarters at a time. That's the only people that would tie up that much money just to buy insurance. At the start of the trading month, which is always the fourth Monday of the month, which was yesterday, is the first day we call it the first day of the trading month. And the first day of the trading month is a whole new monthly options expiration. So we're now a month away from that. And when you're a month out, monthly hedge pressure is going to deviate really far. Like that Monday is always the best sentiment that you have of the actual market. We always tell people there's an iron wall on the Friday before. So now that we're in this Monday and monthly hedge pressure is so far below price, that's a sign of how bullish we are. It's like it's showing you that we've pushed way far into monthly hedging, like gamma hedging positive on the monthly. And so the reason that we're stuck, that monthly hedge pressure is so far below it, it just means that that's how bullish we've been and how bullish we are starting this month. So when the month, you tend to go towards the end of the month, you'll see that monthly hedge pressure will through the various decays of different Greeks, it'll start to move closer to price. Like they'll start to converge as the month progresses. But with the start of the month, if it was a very bear market or market's been selling for a while, you'll see monthly hedge pressure way above hedge pressure and price. Just like now, you see it way below both of them. So it just shows me that the market can sustain bullish monthly gamma, which is a word for, another word for thinking about order flow, just to hedge as long positions. as low as that. So if the number is what, 395, I think is how low it was. It means that the market could completely collapse to 395 today with today's data off of really terrible earnings, which is really far. It's not really possible, but it means it could fall that far and still find bullish hedging pressure for those monthly options. That means bears are stuck. And when we keep saying bears are stuck, that's your evidence of it. Look how far above we are in that bull territory in the month, in that structure. So it's cool. It's cool to see that. And it does, I always like to wake up the Monday after monthly options expiration and support that thesis that I had, that I was saying that, bears have been squeezed and the market's just stuck in bull territory right now. And that's the evidence of it. So it's a neat thing to see. And as the weeks go by or the days go by in the month, you'll start to see 395. That'll move higher and higher and higher and start to converge with price. And then when it does is when you start to see a lot more that sentiment decision, like people flip-flop and go the other way as those monthly hedge pressures break. And that's a longer term bearish change. So if you like to look for reversals in the market, when you move from being above monthly hedge pressure every single day for the last, I don't know how many months, to the day that we crash below and start trading down, it's everyone flipping bearish for the most part on longer term positions. So that's a gauge that I use for sentiment, pure as day. So it's a neat tool and it's one of my favorites for sure. Come on, baby, hang tight. Hang in there. Chinese stocks are blood red. There may be an escalation. Could be. Yeah, Kevin, I always try to predict a move instead of chase a move. Chasing a move is only really useful whenever you break through hedge pressure one way or the other. Like if we were to break it to the upside, I'd chase the move long. If we were to break it to the downside, I could chase the move short. I only chase when there's a proof that you're going to hit something that's going to start pushing it faster. I don't chase because it's looking red, right? So I need to have a reason to chase something. I very rarely like to do that. And if I do, it's always a smaller position because the majority of the move, if you're chasing something, you're coming in at the tail end. So you don't want to go in and believe that it's worth putting a lot of risk on the table. So any chase trade, I would come in with a fraction of what I normally would trade with. Don't touch that DD van. Don't do it.
Don't do it.
Come on, baby. Don't break it. Let me double check my risk interval just to double check. I just get nervous. Risk interval bot in Discord will give me the number. Still 31. Okay. Yeah. It did touch. That's an alarm. So the fact that it did touch is very cautious now. I don't like that it did touch. Not a big fan of that idea. Yeah, I don't like that it touched. And it's not getting strong support there either. Don't like it. Come on, baby. Come on. Come on. Resilience is trying to make a fight for it. There's some stocks that are trying to hold. Come on, baby. I don't like it anymore. I don't like that it's not. UVXY could hit 4 and turn around. Yep, I am looking at that. It's just a potential pivot, so volatility could dry up as UVXY approaches there. So could be a DD band break, which is not good. It would not be good, especially like pre-earnings for this to happen. Resilience is starting to press a little lower, so stocks are losing their fight at half cap. 41.15 incoming. It would be very rare for us to break through. With all the conditions we have, it would be very rare to break through that DD band. If it did, I'd be very scared of 415 or even lower. Everything's looking pretty good. Like I said, it'd be very unusual for that to happen. And so it's the least probable, I guess, least probable of the option of supporting versus not supporting. So it'd be interesting to see how that plays out. If we break through DD band, it's lights out today. Yeah, I'm not touching that with the funded account. Let's just take a look for some monthly support here really quick. Let me refresh my platform here. Very highly unusual today. We get monthly options. Monthly options still bullish, still longer term hedge pressure. Monthly way down here. Not good. Yeah, it's right at the edge. I'm looking to find supports elsewhere. So right now I'm trying to see if anything else is testing as well. So Nasdaq is right on its level as well. Typically I do 10 points on the other side of any pivot on the S&P. Let's look at IWM here really quick. Yeah, this is pretty gross looking today. IWM, illiquidity pocket. Could be another burp down. Right on the edge. What's up, dude? Right on the edge. Yeah, this is not good. This is unusual for that to happen. I don't like unusual. I hate that word. So let's see if that just... It certainly fought there and lost, so... Right on the edge. It's hard to think that we do collapse for earnings, though. Unless it's just trying to price in like preemptively price in the move. Hanging in there. Hanging in there. What event is coming up? Oh, that was just the... we have earnings after market today. QQQ right on that edge there. I don't like that it tried to break it. That's not giving me a lot of hope. Normally you'd expect it not to break, so that's interesting to see that. So, Omar, you are... it's very clear you haven't watched the videos on DD. Let me tell you a cool thing about that. DD is 100% perfect and 100% correct. There's no way to make it sensitive. You have to get out of the mindset of what it is. DD's gonna win. Typically always wins. DD's pointing at the fact we're gonna trade up for the rest of the day. It's actually being what it was is a hint to not believe this sell-off. Got to stop thinking about technical indicators. It's very clear they poison your brain, just like smoking gives you lung cancer. They make you think that they need to indicate the movement as it's happening. Like if something was sensitive, it'd be going down before or while the movement. DD is telling me that I'm good being long here because it hasn't come down. It's the real truth of the market. It's this sell-off is unbelievable. It can't be changed. It is the flux of market cap in the bull zone of all the stocks divided by the sum of bull plus bear zone. So the interesting thing about it is that it is showing you the truth. Stocks are in their bull zones despite the index selling, right? So the idea, can you hear me? So DD is telling me that I'm looking for the bull zone to ultimately be the place where we go to. So the fact that it shows what it shows is a very clear picture of what's possible by the end of the day. it's saying that that's still very possible. The fact that there is a short from hedge pressure, liquidity map will show you this. There is an open, hedge pressure, open. This is always a liquidity map play, and that actually took place right here. Any trading from here to there is unusual and was only triggered by an event, which is a coin flip. You can't predict that with any indicator. So either way, the idea is I'm not in this account, especially here, I'm not doing anything past the event. I'm deciding now what do I want to do. So now, let's put the pieces together. DD is aiming at 413. Typically, when you're not irrational, a positive or bullish DD shows that it wants to resist this band. It very much so. It almost, they had a rule that it doesn't even want to touch. And the fact that it touched is what scares me a little bit about it, that the event is stronger than we think. But in all normal circumstances, there's support here, and with resilience being negative, there's resistance there. So there's a scalp potential through here to trade just like that. With DD being positive and bullish, it means that the bull zone is where stocks are. You can go load up as many of the stocks as you want, and majority of them will be in the bull zone. So if you think about it, this is the truth of the market. That's why it's the stronger of the three tools that we have. It's showing us that the stocks are still bullish, and SPY is bearish on its own, despite 80% of the flux being on the bull side. If your DD is bullish, you're looking for a short, you'd be cautious to take profits. Abraham nailed it. Like you would take shorter term shorts. You would short from somewhere to somewhere, like from here to here, take a scalp. If you did want to short off of this, we don't have a rule for that yet. I don't chase shorts, but if you did short, clearly with DD being bullish, I would short from here to there and then take profit right here where you see all that resistance coming in. But it's a great question, because what you notice is that a lot of people still think with technical analysis, the indicator typically follows price most of the time, right? So it's going to be very quick acting, but resilience and DD are different. They're not tracking and following price. They're following arbitrage, which is the relationship between two things. So with DD being extremely positive and the SPY being in the bear zone, either the stocks are about to start collapsing or SPY is going to rally to catch up. One of the two is about to happen, and it's going to be violent. The idea that we're hitting that support, not violently bouncing, is what scares me. The violence could be that stocks are falling lower, and I need evidence that stocks are falling lower. Would either be A, the DD band is now going to start picking up and dropping, which would mean that stocks are leaving their bull side to bear side. This will start plunging, or this will start getting worse as more stocks break through and support their downside gaps. So either way, I'm looking for one of our two tools now to indicate that the stocks are giving up their fight. And it's not just the S&P just sold a little harder without the stocks moving. Does that make sense? Marie, I draw these manually every day. Manual drawing. So when you piece it all together, DD is designed to ignore junk and junk moves, which is great. DD is designed to be the purest reflection of the market. While stocks are moving up or down, none of the stocks are leaving their bull zone. They're all just kind of hanging in there. And if we were actually to have a scanner setting a scan for that, which actually I do have a ticket to make that, you can see that stocks are still in their bull zones. Like none of the stocks are flipping bearish just yet. They're maintaining bull side. I mean, bigger stocks. Like this is no change because it's bearish and bearish. It's not changing from bull to bear. Let's put anything on here. This is still considered bullish. Through here. So you can see that while there is a little bit of selling pressure, it's just profit taking before earnings, and stocks are still very, very, very bullish. Now, we're not getting a sharp push off of DD, so that really scares me. But to see the SPY like this and the stocks up here in bull zone, there's a clear discrepancy between the two. So you have to decide what's going to happen. I wouldn't short the index from here. It answers your question for you. If you wanted to short something, you would short the stocks, wouldn't you? For them to catch up to the index. If you wanted to long something, you wouldn't long the stocks, you would long the index to catch up to the stocks. When you see these opportunities, it allows you, people ask, do you pick which stock, do you pick which whatever, this is how you do it. Do y'all understand what I mean arbitrage, right? It's clear the S&P is trading in its bear zone, and the majority of stocks market caps are trading in their bull zone. So they need to meet in the middle somewhere. So either the index is going to trade up to catch up, or the stocks are going to trade down. Well, here's where the stocks are. We're not seeing any change there. Resilience is still kind of icky, but that's just the half gap mechanic. So stocks are still fighting midpoints, and if resilience starts to get lower, you can see that we're going to lose, some of the stocks will be losing their battle with the gap. So you can see that preemptive preliminary sign there, and you have to guess, are the stocks going to sell or the index going to rally? But do you see how you have to trade one of the two? You can't short the index from here. That'd be silly. You can't long the stocks from here. That would be silly. Right? Does everybody understand what I'm saying when I say all this? Does it make sense? The S&P is traded down in its bear zone, and the stocks are in their bull zone. They're going to connect because the SPY is going to try, S&P is going to track the stocks. Right. So you have to choose what do you think is going to happen. And right now, it's, I believe that we're probably going to be at 413 by the end of the day. Maybe. Maybe. It should be close to about 4160 on the S&P.
Introducing Transcend Lineage, the next generation of decking from Trex. Crafted for performance
So we'll see.
and beauty, and available
The fact that we did attempt to touch a D band scares me, so I'm going to be very careful waiting for like more red nasty candles to come through here. If that happens and this number starts coming down and this number starts coming down, then I'll be a little more alarmed that the stocks are going to give up their fight. No trades today, not in this account, no. There's nowhere to trade off of that gives me confidence for me to risk this account, this ETF account. I have to be very specific about the trades I do take. The index is a composite of the stocks. Oh, well, this because SPY is not the index. Think about it. The SPX is the index, and you're correct. They don't deviate. There's no variance. This SPX is equal to an aggregate of the stocks weighted by market cap. But the SPY is an instrument that has its own supply and demand despite that tethering. So it's like the SPX will be tracking the stocks and SPY will be tracking the SPX. But the SPY will only track the SPX if it's not being bought or sold abnormally. So if I'm a hedge fund and I own a bunch of SPY and that's it, and I start getting squeezed and I have to dump on my SPY, well then SPY is going to push lower and the stocks aren't going to be doing anything unless people are selling the stock, which means the index won't be doing anything. So SPY varies from the index. That's the answer. Alpha, it's a static drawdown. Does that make sense? It's a great question, Ralph. You nailed it. So it's SPY deviating from the SPX is what the variance is, which means the SPY and the stocks are deviating, not SPX and the stocks. You're right. That doesn't happen. But anything that can trade on its own has its own supply and demand. And right now, the stocks are still squeezed into bull territory, and the index is getting a little preemptive selling into its bear side. So there's an opportunity there. Either the stocks need to flip bearish or the SPY needs to flip bullish, and you have to bet that one happens. So already it leads you to the idea that you would have to either buy the SPY for it to catch up to the bullish stocks, or you have to short the bullish stocks to bet that they catch up to the SPY. But it eliminates two of the options. I wouldn't be longing the stocks. If I'm going to long something, I'm going to long the thing that's lagging. I'm not going to be shorting the index. I'm going to short something. I'm going to short the thing that's lagging, sorry. Like I put up any other, like, let me just put Apple or something. See how Apple's kind of selling, right, in its bull zone, but it's not really collapsing that hard. It's just mildly selling off. It doesn't look as bad. And the SPY just looks bad. So one of them has to give up. At some point, they always converge. SPY will get back to tracking. Once that demand or that pressure on SPY is alleviated, SPY will get back to tracking the SPX. Once it's kind of like a autopilot on an airplane. It gets pushed to the left because of a wind, like a side wind or something. You got to steer into the right, and ultimately you stabilize again. At some point, once that pressure is alleviated, you get right back on track. And that's something to just take note of. Dead air, you nailed it. That was the caution there. I was a little alarmed when I saw it happen. I wasn't expecting it to break. I still have my position. I still have my long. Most of my entries were at about 41.28 and some change. So that's good. Most of my entries are there, so we are getting some traction there. A little bit. I don't like that we did touch that DD band, though. I don't like it at all. That's the scary part for me. It did break through it, so that's not the best sign in the world. Not in the clear yet. All right, everybody, make sure you get that link in the description. Head on over to the Discord. Check out the extended trial, $35 a month. For 3 months, you guys can check out everything we have, our boot camp. I have to go pick up Nicole from the airport in a little bit, so I'm not going to be able to catch back up with you guys today. I know I've been pushing the Zoom calls back about a week, but we will make sure that starting tomorrow, we'll get back to them every single day. But it held in mostly positive context. It did, Beavis. The one thing that is alarming is that traditionally we observe that it doesn't want to even touch. The markets are rational, and that DD band is very bullish. It doesn't even want to touch. The fact that it did touch alerts to abnormal selling pressure, which means I'm still not confident, as confident as I'd like to be to like YOLO my, full port my trade here. Louis, been trying to reach me via Discord. What's up? I'll get. What's your name on Discord? Zoom calls are usually after the live stream. Zoom calls usually come about. I take about an hour break, and then we go to Zoom. Demio? Oh, okay. I got you, bud. I haven't had a chance. Dude, I like your design. I haven't even seen it yet. I was waiting to get to him today. A hell of a time. That is very cool looking. I like it. I like that you incorporated colored lines. He's submitting for the contest. That is really dope. I do like that a lot, man. It's really nice. I'll have to see if we can accomplish gradient shading. We have the only thing that we can't do is deviate from what the TradingView library allows us to do. In future, we'll have our own charts at some point to be easier to make whatever we want. But if they can, I like that idea. Colors. Just colored lines in general on those zones. Like instead of them being gray, green if it's more like more bearish should be a brighter red, less bearish should be like a pink. More bullish should be a bright green, a less bullish should be like a mint. Like the idea that you can have different colors. That's a great concept. That's easy to tell, easy to see. That's really nice, Louis. Bonnie Tech, you can change the colors. You can go into the settings and modify your colors and save them that way. Is this recovering? It looks like it is, yeah. Still showing that we're gonna have resistance down here, but yeah, I like the idea of the gradient. If I kind of want to, I like where you went with that. What determines green and red levels? Bull side and bear side. I know that the liquidity map drawing me to the colors are different on the platform. It's just a personal taste thing. But bull side and bear side, there's a legend on the liquidity map that tells you what they are. You call them call wall, put wall. Oh, I guess we should mark those as like bull zone, bear zone. We need to update this to reflect maybe the colors and the names. We call wall, bull zone, synonymous. Call side, bull zone is a zone of call wall. So these are the red and this is the green on the liquidity map. In our diagram, call walls are presented as red, put walls are presented as green. First, on what determines the green and red levels? No, it's just showing you that there could be multiple next to each other. A bull zone is if you're inside of if you're above any bull territory, bull wall. Good question. So like it doesn't matter. We just drew two just to make it. I guess it is kind of confusing if you've never seen it before. We'll get this modified this week to kind of be a little more self-explanatory. It just means that it's bullish anywhere in this arrangement. It's trying to give you multiple options. Like if you're here, it's still bullish. If you're here, it's still bullish. If you're here, it's still bullish. The B is still B above any of the call walls. If you're in between two walls, these two walls would make a zone that would say zone. So this implies that if you're above the zone or in the zone, it's still bullish. So the idea was to say you're bullish here, you're bullish here, you're bullish here, you're not bullish there. So there's no top to bottom. This is bullish forever. Even up here, it's still considered bullish, 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 bullish. until it hits a bear resistance or is in a bear zone? Great question. Yeah, see, it's not getting that big burst that I want to see, though. We should get a little better. Brief explanation on half gap. Half gap is the halfway point between the open and close. Today's open, yesterday's close. And the halfway point is always a really strong pivot. Resilience is a predictor of what that halfway point should be doing. And so right now, at this moment in time, on the S&P, resilience is negative. So it's telling me that this is resistance. And it's when you're inside of the box. And so when it's positive, when it's negative, we call that mode 1 resilience. How do you trade inside of the gap? Now, beyond like where the gap fills or beyond the open and close, outside of this box, we call it type 2 resilience. And clearly we're outside of the box and resilience is negative. So right now, that's resistance. If you're above the box and resilience is positive, that's resistance. So like a gap and go will maintain that. That resilience will be positive. Resilience will be negative. So right now, my long to 410.50 is pretty much all I'm aiming for right now. If we get there and resilience starts to look better, as you can see, it's starting to improve as the market's moving. By the time this gets there, this might be positive, which means all we have to do is if we get there, if we trade to there and res goes positive, then it's a straight shot to there. It'll be rapid. Problem is, there's no guarantee of that, right? So I got to bet. Kevin just learned something new, the mechanics of SPY and SPX. Oh, yeah. Every day we try to always talk about something new, so I'm glad you liked it. But I don't like the fact that we did tap that DD band. It's just not something you'd expect to see with such a strong DD. So that's actually something to be worried about for today's setup for me. And we have fallen from 85 to about 79. So some of the stocks have been losing a little bit of steam. But it's trying to hang there. You guys are too kind. Too kind, Waylon. Way too kind. So half gap is like the idea is that we exploit the idea that SPY trades on its own and the SPX tracks the stocks. So they're going to deviate from each other at points. The SPY and the stocks will move in different directions. So half gap is that similar philosophy. If the stocks are going to be filling their gap to the upside or stocks going to be filling their gap to the downside, then SPY, you have to look to see if SPY is behind or above that as well. So right now, the stocks are not filling their gap to the upside. They're actually rejecting their own half gaps. And so therefore SPY is not going to get any of that momentum either. So right now, it doesn't look so hot, right? I'm having to take a gamble here With resilience being negative, then I know my upside target's currently limited. So I'm only planning for this. The stop down here. Does that make sense? I'm not even going to go for a full point. If I just do half a point. If we break lower lows, I might get out. But the reward to risk is still kind of there, but the fact that this happened, I don't like it. This should have not touched. It should have resisted really hard. The fact that it did touch shows weakness at a place that should be extremely strong. So that it is alarming. Your trap below hedge pressure is waiting for a half gap to close long. Distress will bounce by close as bears close shorts. I mean, you need to have a risk plan. Don't just hope, right? Know where you need to get out. Don't be trapped. Anytime you long, like we're below hedge pressure, right? There was no place too long from, with the exception of the bottom of the open. And that weird candle that came out of nowhere triggered the selling pressure right here. Unusual things happen, and so if I've been long and I didn't have a bigger plan, I would have cut out, you know, somewhere down here already. You be very careful. Right now, all the signs we need to see: res push and DD push, right? Apple touching hedge pressure. So yeah, we got to see any stocks that are gonna find potential to move. Let's look at Apple. I'm gonna have to leave and head up to the airport though. I wish I could stay here with you guys. So keep an eye out on stocks that could trigger a more downside move. This is a bad sign clearly. So watch Apple. And a lot of this movement today is Apple is causing a lot of that. You see that sensitivity? See how resilience is very sensitive to stocks in the redistribution zone? That's a great lesson for today. Resilience is not like a weekly price tracking indicator. You see how when the stock market, when Apple moved from 166 to like 160, like this huge move right here, you see how resilience barely moved at all. When Apple is inside of its redistribution zone, resilience is extremely sensitive. The math is designed to reflect just redistribution zone. So a lot of people use very weak trending indicators, right, that just follow price. But what really matters is this zone is so important because there's a huge buffer of sellers and buyers on the other side of it. Apple can move this whole distance, right, from here to here, and resilience did not change at all. And Apple can move just this tiny distance right there, and resilience plunges. Do y'all see that? It's something on my screen I want you all to take observance of. Resilience is extremely sensitive to the order flow buffering effect inside of the redistribution zone. It's pretty cool, right? You see that, Louis? So the idea is that the choppiness that you see right here can be attributed just to a couple stocks on the balance, right? Apple going up, down, resilience up, down. It's very sensitive here. So you're kind of on the fringe with a couple of stocks. And I'm glad somebody, Bonnie Tech, brought this up, because if we do break hedge pressure and Apple starts collapsing, it's probably game over for the index, right? But notice how every time like Apple just moves a little tiny bit, right? SPY just jumped up like 4 points. So what's really neat about resilience is that it's an aggregate of 500 data points. Apple's going up, resilience is not affected by it. It's not a thing that ticks up when price ticks up, or ticks down when price ticks down. Those are like reiterating price. Like Apple had a fell, consolidated, fell, and resilience was like V-shaped, nothing, fell, and held. Resilience did this. They look nothing alike. Just do this. Resilience bumped up and this held flat. So it's oh, hello, there goes my trade. Let's go, baby. I like it. All right. Let's make a look at this. Where's my upper target on the ES? Right now, it's going to be at 41. It's going to be right at the open. About 41.38, give or take. So right now, with resilience being negative, I'm looking for this to at least tap that, and I don't know what's going to happen from there. When we get here, we're going to need some stocks to break up to the upside. So let's go ahead and add a half gap breakup. Let's see if we're getting any stocks break up to the upside to give us a little bit of momentum there. One's around the edge there. You just passed step one and top step. Barb, let's go. Putting in that work. Congrats. Good job. Is information in the course videos? Yes. All of this information is available in the course videos. Correct. Everything. The resilience videos cover this in detail. D for the win. When Apple goes up, S&P goes up, so it might be worth it to have an indicator for S&P similar to resilience, but when considers price outside redistribution zone, it's the same effect. So the redistribution zone, it doesn't just, not all things are important. That's like, I guess, the number one thing to take away from the rocket scooter experience. Not all prices matter. The reason we can have an indicator like this is because we have something interesting that happens here. The fact that every single day, stock volume curves look like this from like open to close, right? You have pretty much the largest volume. This is volume over the course of the day. Largest volume at the open and close typically of any day. So this is a very large bulk of buyers and sellers on the opens and closes from day to day. So there's like this instance we gapped down or gapped up. You're going to have a lot of buyers and sellers on the boundaries of this box. So the idea that that is an offset position a market maker takes. For instance, if there's a sell and balance of 1 million shares, well, the dealers bought those 1 million shares. And now they want to get rid of those 1 million shares to someone else. They want to get out of it, redistribute the position all day. If they had to accumulate a short, they want to get out of the short. They want to leave the imbalance position. So when you're bouncing in the box, and the market's trading lower, well, they're looking for buyers. Well, you know there were buyers because there's an open price discrepancy. You had a buy imbalance or a sell imbalance that created either of these edges of the box. So the idea is that we exploit the fact that if you're in the middle of the box and trading up looking for sellers, well, they're going to be probably there. And if you're below the bottom of the box looking for buyers, they're probably going to be there. At least the first place you'd look for them, because they were there at yesterday's close and today's open. That's what caused that effect to begin with. So you're going to, if there were people that, say, pretend we gapped up and there was a huge buy imbalance at the open. And so the dealers are looking for buyers. Well, the buy imbalance took place at the end of the day and the start of the day. From that close price, people decided to buy, and that's why they gapped up, right? At the open. Put in that order to open, and there's a buy imbalance. Well, you know there are going to be buyers all down in here. So they're going to test that level. Are those buyers still there? They did long here. Oh, are they going to stop out? Okay, let's go lower. Oh, they're going to hold the fort. Okay, let's go higher if we find if we do find buyers. We lower price and we find buyers. So the idea is that this exploits the effect of pivoting from here to there and off of there, or pivoting from here to there or off of there. It's the strength of the pivots, half gap, open and close. So resilience exploits that process alone. Outside of that box, resilience it's just confluence for the strength. When you're trading up here, resilience doesn't matter if resilience is 10 or resilience is 99. 99 resilience doesn't mean that. 10 resilience doesn't mean that. Anything above 0 means bullish. It's indeterminable. You can't really use something that's exploiting a redistribution zone outside of the zone, other than the zone should maintain that support. That makes sense, Andre. So what would you do outside of the zone? It's very impossible. Just the same failures of technical analysis on the surface is really impossible for you to use an indication to predict strength of trend. Like how long until bulls don't want to be bullish? That's more of a question of how far into squeezing bears are they still able to hold on. And honestly, we only exploit things that have a reason to pivot and take the stance that direction's impossible to predict, or magnitude of direction's impossible to predict. I trade from somewhere to somewhere based on clues that I get. Today's somewhere to somewhere is, this should not have touched. It did. It was just freaking me out. But because DD is bullish, and all signs are rational, it should not have touched that band. It should have rejected really hard. Resilience being negative points at a pivot that way and a pivot off of that. So either are possible. We're below the band, so I'm expecting a pivot off of that. Support there, pivot off of that. So we're going to do this today. That's what I'm betting on. Already can see that. Bear short up. The V-shaped upside down move already took place. So I only do that one time, and then that's basically it. So any break from here, any break of hedge pressure with a positive resilience, around 0, then we push to here. And also, the DD rule says that we are looking from here as well. So now I'm going to piece the first move together. Hopefully, resilience presses to 0. And then pops. And then this pops. And then slowly pushes higher. And makes its way there by close. We'll see. So it's going to move in stages, right? We're going to resist the open. We're going to resist hedge pressure. I need to see resilience pop positive. And look, right now, it's trying to get there even now. So I'm excited about my big play. You guys like it? Barb, you reset your account like 6 times and found Rocket Scooter and passed it without a reset. Well, Barb, I think you didn't find Rocket Scooter. I think you just found yourself. I like to take credit for people's victories, but I did not push any buttons for you. I might have just opened some doors for you to see some things, but I'm very proud of you. Good job. Very awesome. It's such a different thing that happens when you start focusing on risk management first and foremost, like when not to trade. Is that what you, let me ask you a question, Barb, since you've been here for a couple months now. What do you find to be the one thing that was limiting you as a trader before? What do you do differently now than you did before? You say RS teaches you to be a better person. It's hella true. My girl, I like it. You and your family, y'all are hopefully benefiting from the better Barb. It's all like trading is a mental game. You have to become a better person upstairs. You have to have, if you're like a crazy lunatic, off the wall, hyper ADHD brain, math brain like myself, just like all over the place. Rocket Scooter has taught me to be patient. I mean, 13 years of yoga and I still struggle with patience, but like trading the way I do, it's taught me to be patient as a human. Like I'm patient with people. Like I talk to people differently because I'm a better trader. Like I think about things before I act. Like this like life skills, and those apply directly to success in trading. 100%. Can I have 2 windows open with 2 charts? You can click this button right here to pop out a chart. And if you're having like memory leak issues, like it has a problem loading up or freezes, just use a different browser. We do realize we're exceeding memory capacity in browsers by preloading and pre-caching a lot of this stuff. We have a optimization project coming through. Example, like, you know, clicking these and the liquidity maps pop straight up. You know, we got to use a lot of memory in your browser so that it happens quickly like that. So we need to do some compromises and some clever programming. We've just been making stuff too fast to optimize the memory usage and experience that you guys would have as users. Go baby, go baby, go, go, go. Oops. Where'd my resilience go? There it is. There's that open test, right? Rez is trying to fight. Trying to fight. Got a 10,000 contract sell right here. Come on, baby. Okay, that is some interesting selling pressure. We have 9 minutes until European close. That is some really nasty fall on there. What the hell is going on? 15,000, man. Futures are getting liquidated like crazy. That is interesting. Yep, that is exactly what I drew, though. I'm gonna be kind of playing in there. We'll see how it gets for the rest of the day. It's not a good. That's not a good sound. That's not a good sign. That is a lot of selling pressure right there. Off of. Let me double check the news here. Make sure nothing new came out. Nothing there. Very abnormal selling pressure. Wow. Our stop loss and index attracting price action hit that value repel it. It attracts the liquidity grabs, correct? I mean, I don't know which level you're referring to, Fernando. Let's see what Apple did, like an example. Saw resilience have a thing. What's an Apple? Interesting. So if you're talking about the redistribution zone, it's not stop losses. It's more about market makers are trying to break even as much as possible. If they close the price somewhere, they took the other side of the trade at that price. If they open the price somewhere, they took the other side of the trade at that price. The big trade, the opening trades, and the closing trades. The market makers are the ones that have positions on the boundaries of the redistribution zone. If you gapped up, it's because they long there and you're trading in the zone. They long there and they shorted there. That's why they're in the middle. So they're testing to see where other buyers and sellers are. Like, I closed my long. Fuck this. This is stupid. I took profit up here a little bit and I closed all of it out. So I'm going to not play this. This was alarming to me to begin with. It's going to take a while to fight, but I got to go to the airport, so I'm not going to get a chance to play it. Okay, what'd you guys say? When you say rest, you should be a person. You trade every day. Before I was basically gambling, just guessing based on TA. You have a game plan, entry, profit target, stop, and if irrational, sit out. It's intimidating when you first see the course curriculum, because the first week is like risk management, and people go, ugh, that sounds boring. Where's the indicator? Where's the pivot tools, and where's the shapes and colors on my chart that show me what to do? The first week is like coaching and shaping your brain, right? And when you boil it all down, Barb nailed it in a single sentence. You have an entry, a profit target, a stop, and a game plan, and you know when to sit out. And you know when things look odd and weird, like the fact that we touched lower DD band. I don't have a lot of faith in this today, even though DD ratio is giving me a lot of faith. I need to let this play out a little bit more. Now I can't watch it. My game plan is I'm not going to trade if I'm driving, can't watch it. So maybe can't do much. Yeah, so like a game plan, right? And to me, that's so important as a trader. You've taught you to be able to sit out, Louis said, certain days that don't look great instead of trading into losses or trading into like emotional losses. Like if you are trading into choppy weather that doesn't look good, this trade was pretty textbook. I took a long. I loaded up here. I started trimming, and then my loss wasn't that big. I took a little red for the day. It could probably be green ultimately. If I make it back and it still looks good, I might want to trade it to this bull zone, but this is a lot of pre-earning shift. I don't like these unusually large red candles that have no explanation. Well, I guess resisting the open on resilience is part of the reason, but still. 845, 945 drop this morning. This 1020 drop. Things are looking weird, and I'd like to pinpoint it's likely into European close. Markets close in 4 minutes, so this could just be but it's such a light volume day. The market has no depth to hold off big orders like that, and you're just selling. I mean, sorry, it's like a very thin market, so big orders are moving it quickly. 15,000 contracts on the S&P, 4,000 on NASDAQ, that 1 minute candle. It's crazy. For now, Europe been super bearish since Europe CPI. Yeah, that is kind of booty. Global effects tend to create pressure. Generally, when it's a recession, you have to understand that the recession is not just an American thing. If you're an American trader, that's for sure. Managed to catch that short right for the dump. Yeah. Like I said, my first drawing earlier was from here to here in resistance. If resilience goes positive and starts holding that level, then we go through here to there. Like when resilience goes positive, which I'm going to look for at the middle of the day, maybe if I get back here and there's like a stark shift in resilience, I will jump in and chase the long. Because we have such a discrepancy to bull zone. Now it is pre-earnings. You have to remember this is a little bit pre-selling before earnings. But the idea that we did touch that lower band is scary. It should have not touched that band. That was an early warning sign that the selling pressure is abnormal. Do y'all understand that? One of the rules, there's a whole video on it. It says positive DD shouldn't touch that band. It shouldn't. And when it does, you know it's unusual. I grabbed me some Taco Bell last night at like late at night. So I'm about to snack really quick on my cold Taco Bell breakfast. Oh, it's not 15,000 sell order. It's 15,000 contracts in a minute. I'm just looking at the volume on my Thinkorswim for S&P futures. I just have a chart up right here. If you look at my video, the pre-market, Matt's pre-market check. So I'm currently flat, by the way, across the board. No position. I only lost maybe 3K, not too much. The count was at 60K. Now I know its confidence is not good. I told you guys all morning, this shouldn't have happened. As soon as that candle came out, I dumped everything right here. I completely closed the rest of it. I was trimming a little bit as I was breaking even. I actually went positive 3K for a little bit. Trimming, and then it dumped, and then I went negative 3K, and I lost. But hey, I tell you, I don't know when to hold, when to fold. I'm glad I lost 3K and not 50K. Right? It's all about being smart. Can't win them all. But it's clearly I can detail to you guys what happened that was very random and scary. We have a rule, DD rule state, and we all know that, is when that number is bullish and these are rational, which they all are, it shouldn't touch that lower band if it's going to bounce and rally. Does everybody remember that video? It does not want to touch the lower band. Y'all remember that video, right? So the fact that it did touch Louis and all the others that have been here for a little bit, that is an alarm. Like, we don't have alarms for this, but we should. That is an alarm that says it should have floated. It should have floated above like it did. The fact that it touched, there's an early warning sign. So again, we learn on the fly. I'm trading about 5 to 10 contracts, give or take, at this point in the big account. So as we learn as we go, do you see how here's the thing. Can I teach you about what it is to be a good trader? At least in my opinion, right? We don't have a rule for that alarm I just circled. There's no rule for that. The rule is if DD is bullish, it shouldn't touch the bottom. It'd be rare if it did. And if it does, I automatically, I know my style so well. Didn't I tell you guys all morning, I feel weird, I don't like it, I don't trust it, I feel weird, I feel weird. Back-to-back red days. Yeah, I've lost 2 days. I lost was it 1,300 yesterday? My run-up is like 50 grand. My drawdown's like 10. My max drawdown. My run-up to drawdown ratio is like 5 to 1. I'm fucking killing it. Yeah, 2 days. I haven't lost that many days, to be honest. These 2 days are like the only two. These are the only 2 days I actually lost in April, to be honest. I'll post the P&L up later. I think I've only lost 2 or 3 days in April on the big account. 5 to 10 minis. I had a really good April. That's for sure. Joe. Leave Joe alone. He's over here taking notes. He wants to learn how to build a tech company and go viral. You know what I'm saying? I'll give him some tips. Here's some tips to make a lot of friends. Here's some tips to be good at trading. Here's some tips to post your broker statement. When you do those 3 things, nobody will fucking stop you. You will take over this industry. I am taking over this industry. That's it. Hey, 5 to 10 minis that have a heart attack. Well, yeah, I mean, when I saw that red candle, I definitely have a heart attack. And tune in tomorrow. I will be on a podcast with Anthony Crudelli and Ashton as well. We were invited to speak about zero DTE options flow. I'm going to present a topic on that and talk about how that's used in futures trading, as well as talk about what we do to account for the risk in 0-day or near-term options. As we all know, it's a big hot topic in the markets. Anthony Crudelli is a very popular futures podcaster. So how can we incorporate that information into our trading in futures? So obviously we'll be talking a lot about Rocket Scooter monthly maps. Monthly maps are how we analyze near-term risk. A liquidity map is overall risk. A monthly map is splitting out those days. So an example, look at SPY here. All of that near-term expiration, the risk we can monitor very accurately in futures trading. It's showing me the bull side is stronger and the bear side is weaker in the near term. As that flow changes, our monthly map will pick it up the next day. Do I work with a stop loss? Whenever I'm at my computer, I don't use a stop loss. When I'm away from my computer, I always use a stop loss. I tend to know how to maneuver my trade within reason. There's 2 things I know. Under any event circumstances, the market will probably move what I call a rapid move, which is the market rug just falls underneath you. as long as you're as long as you're up to date with what events are coming on the calendar, you know where your earnings are, you know where your events are, and you got like Financial Juice or some kind of news aggregator feeding news to you, nothing should surprise you in the market. Abnormal selling pressure that triggers a quick drop, what I call, or a quick run, moves a risk interval, which you always should know as well. 31 points, I believe, S&P's 31. So if the S&P drops 31 points, I'm never in a position where 31 points doesn't drop below my max percent loss of the day. That's how I plan my position size. So worst case scenario, the market will run 31 points against me when I usually have a stop 10 points below some target that I'm trying to aim at. For the most part, one strike distance from a target. So one strike up a hedge pressure, one strike away from the bear zone, bull zone, whatever. So the idea is I know what I want, and I'm in a position to where, at worst case scenario, I can control it. If there's a quick drop that goes at least a risk interval, there's always a hold at that first risk interval before it continues to fall. I can always push the button. Now, it requires extreme discipline. You have to have all angles covered. I don't recommend you guys do that. There's a benefit, and I try to explain the benefit to people. The benefit to you of not using a stop loss only applies as you're mastering your craft. It's like if someone says, I use a golden bow for my cello, it makes my cello sound better. It makes their cello sound better, not yours. They probably make that slight master level in it, like integral, like small incremental change, right? That makes them sound so much better at the master level. And it's worth it to them because they mastered everything else. This is that thing, like, it is so much better at the master level to not use it because you know you have your control. What do you get out of it? You don't get stop swept. You don't get prematurely exited off of big orders that are just sweeping stops. That's the one thing. Number two is you're not revealing your hand to people. Now, it's not going to benefit you as a new trader. It's actually too much risk for a new trader. Always put a fucking stop loss on your platform, always. But as you get better and better and better, and you know your control, you know everything you've done is perfect. Your position size is perfect. You got your, you know there's nothing in the way. There's no reason for markets to move. You know when things look weird, they feel weird. You're always on top of it. Then push the button where you'd want to stop if you have that master discipline. And again, not everybody has that. So the idea is that at the master level, you're looking for slight ways to tweak and improve your game. There are some benefits to not getting swept out. I know that red candle, any quick drop or quick, even 15,000 contracts was buffered very quickly to only lose 6 points in the S&P. The markets don't just drop 50 points for no reason. For no reason. 15,000 contract is massive. That's a massive drop in the S&P futures, right? 6 points. The worst kind of drop you'll see is when an event happens or spontaneous news happens. And again, that you won't be blinded to that if you're using a proper news aggregator. And the worst we've ever will typically see is the market will fall one risk interval. That's the whole point of futures having risk intervals, and then stall out. So my position will never blow me up on the worst case scenario that I miss a news event and it drops me 31 points. I'm always in a particular position. Now, again, 5 contracts, that's $7,500 loss. The worst case scenario, it drops out of nowhere. And even so, you know, because you've mastered your craft, that a stop loss won't even stop you on an order that big. It'll trigger a market order and you actually still get filled at the bottom anyways where it stops. So the idea is if you actually know that, you'll know that you're revealing your hand for the same outcome and you're losing control in your trade for the same outcome. The market fell there. If I had a stop loss right here and the market fell, I probably got filled at the bottom because all that single order took priority and then my market order got filled when that one was done. And so that's always what happens. And you're not really, the only reason you should use one is because you don't have the discipline I do as a master of your craft. Which you shouldn't. How long do you have the discipline? When something, here's how you know you have the discipline. When you don't even have a rule for this, but it happens and you're so fluent in what you do and your own style that all morning I said, this is weird, guys. Haven't I? Do y'all remember? Go back in the stream. This is weird. I don't like this. I don't like this. I don't like this. We have no rule for this condition, do we? I'm so fluent with the way I trade. It felt weird. And that's how you know you have that foresight and that discipline. It just feels weird. Right? There's no rule for that. But I know all the rules. So I know that shouldn't have happened and it happened. Okay, well that's weird. So I don't trust everything just yet. That's one thing you'll start to learn as you do this more. You want to be able to have a little bit of foresight and discipline to know when things just aren't adding up. And it's just practicing your craft. You have to make tens of thousands of trades to really know when something just doesn't feel right, because you've seen it all. You've seen it all every day. All morning, I'm like, yeah, I did take that long. It did what it should have done, which is the float. We always call it the DD band float. There's a rule in the DD rules. I got to go to the airport in a second. Is that when DD is bullish, it shouldn't touch that lower band, and it was fighting there all day, which is normally what you'd see, and normally it rallies very quick. The fact that it didn't rally very quick, the fact that we didn't get a big high volume spike that overpowered the volume spike that sold into it, and the idea that it finally touched all morning, I'm like, that's just weird. That shouldn't have happened. So as we're rallying, I'm taking profit, and then that happened. I'm like, yeah, I'm out. And then look, it's continuing to fall. So there was no rule for what I just did, but I've mastered all the stuff I normally do that now I can actually improvise. What's the sign of a master musician is improvisation, right? And that's kind of what you understand. You know everything, and you know when something's off. You gotta play with what's given to you. Like you're playing. The drummer switches time signature on you. You immediately adapt. You have to, and there's like, oh, I didn't know this was gonna happen, but it feels off. Let me catch up. Right. I draw the DD bands on my own on our charts until we automate that. DD is above 50, upper before lower. If we hit lower first, does that mean we have a lower probability of coming back up? If you hit lower first, Omar, we don't have a rule for that. Today's case, we don't have a rule for it. Today's case was abnormal. And clearly today we've seen some abnormal effects. So the idea is that it prompts me to create an alert. Things that shouldn't happen. Unusual behavior. And so we'll have to observe and see how it plays out. And the unusual behavior, we should call it like reverse band or something, like reverse DD band, right? It did the thing it shouldn't have done. I need to come with a name for it. And so when something unusual happens, you need to be alerted that this is unusual behavior. And what if we decide that if that happens, this is an early warning sign that the bull zone rule doesn't work? Like we actually are going to determine a rule from today and propose one. Does that make sense? So this is how we learn stuff. Any chance your DD band data is incorrect, just like 4 days in a row DD was strong, we sell off in the lows? That's not correct. That's not. All the last 3 days we touched or interacted with the bull zone. All 3 days. Yesterday especially. It means that you interact with the bull zone. Here, there's the bull zone. We did not sell off in the lows. Be careful. No, you honestly are just trolling at this point. We did not close in the lows. We rallied from European close until literally the majority of the day we rallied. So we didn't sell off in the close. We didn't sell off in the close. We rallied all days. And this was last week. We rallied as well. I think you're just bored and trolling. All three, we literally rallied all days. DD represents, again, you're so buried in technical analysis, right? When you think of it like that. DD predicts bull zone, which we touched. DD predict bull zone, which we touched. That's the point. S&P, it's arbitrage. I know this goes beyond, drawing pictures on charts with shapes and colors and stuff, but it's arbitrage between the S&P and the probability of stocks. DD 0.7, we touched the bull zone. DD was like point whatever, we touched the bull zone. You interact with the bull zone. So the idea is it's 100% right. There's no way it's not correct. The math is what it is. It's always been right. But the fact that you think you could predict the stock market with any sort of anything is ludicrous. You only have to bet that something happens with a probability. So we don't have a rule for this condition yet. This is a new condition. So this could be the one day it doesn't touch the bull zone. So most days when you're in the bear zone in the S&P like this, leading into earnings, and DD is positive, our brains all think we're at least going to touch that. And then whatever happens next is going to be random once you hit that other side of the coin. It's not the upper DD band. That's not the, okay. So you skip some, if you're watching the videos, dude, you're skipping some parts. It has two functions. DD has two functions. One is the bands, but one is the zone. When SPY is in a bear zone, you trade to the first resistance bull zone. And that's it. If you are inside of the bands, it's upper before lower. It doesn't say either have to touch. That is also the rule. So don't forget, you have to learn the rules. Let me review them really quickly. Pop it up full screen for you. DD is completely correct. It's upper zone before lower zone. So the idea is when markets are rational, and that's the requirement, it's upper before lower, and neither took place over the last 2 days. So what you're talking about. Irrational markets are catalyst markets. Or anytime the markets are random, you no longer use that rule. So this is the day. Remember this Thursday? I made 10K this day on a DD band bullish move. But I liquidated right at 2 p.m. I remember eating. You guys remember this day, everybody? I made $10,000 that day trading from here to the upper DD, but I always liquidate at 2. So one of our rules is you don't trade past 2. So this is 2 p.m. Eastern. If it doesn't get there by then, it's closed out. Past 2 p.m. is random. So past 2 p.m., the rule doesn't apply. It only applies between 9:30 in the morning and 2 p.m. is the only time we use that rule. Check. Everybody remember? So you don't use that rule anytime. It says it wants to touch the upper before lower. And as you see, it was pushing its way there, but when you exercise these options in the close, it's random. So I'm taking the long because it wants to go there, but I always exit at 1 p.m. I don't, 1 p.m. Central, so 2 Eastern. So number one is this took to the upper DD. Or it went towards it. But then 1 p.m. happens, so the rule doesn't apply. So the rule only applies inside of the window of opportunity, which is what we teach in the courses. Here, positive DD, it's gonna either want to touch the upper band before the lower or not touch the lower one first. That rule worked. This rule worked in the window it applies. This rule worked in the window that applies. These are all perfect trading days. This one, the rule worked again. The band rule worked during the window that it applies. So all 3 days, the band rule worked. It didn't touch the lower band for the upper band in the window of opportunity. So today's the one day that it broke the rule, and now we're learning something new. And again, there's a catalyst in its pre-earnings, so obviously you can see that there's unusual selling volume, and you can't predict that. That unusual candle came out of nowhere, which is very weird, and it already alerted me to not being in a good spot. Was that 10K made off the camera? Yeah, that 10K was made while I was eating crawfish. I was long, had some stops in. Me and Nicole went and drank beer and ate crawfish. I posted a statement in Discord. The P&L for that. So the idea is just know, and that the rule is that with no other resistance, I target the band. There's other resistances. Always the first resistance is where I trade to. So being in the middle, there's a probability you might have another resistance, maybe a gap fill, or maybe something. My day trades only trade to a resistance anyways. Not every day is going to be a breakout. But with that positive DD, you can see that it doesn't touch the lower band pretty much ever during the window of opportunity. I mean, look at this. I mean, it's been positive day after day after day. Now, here we had a catalyst, right? Pre-market catalyst on that Monday. We sold, open irrational, so it doesn't apply. But all these rational days, doesn't touch the lower band, doesn't touch the lower band, doesn't touch the lower band. It's really good. And what even here, it's the hover rule. It is one tick away. It hovered. It doesn't usually want to even touch that lower band, and this rule has been flawless over the last month. That's the one time it broke. Now, the DD zone rule is a second rule, which states that if SPY is in the bear zone and DD is bullish, or SPY is in the bull zone and DD is bearish, SPY has a higher probability of connecting with the stocks, meaning catching up, to correct what this says it should do when markets are rational. So this is the first time we've seen this in the year plus we've had the DD, where rational markets, SPY has violated that rule. Well, it's a couple of reasons, right? Today's major earnings starts today, major tech earnings, and then of course we had some on the calendar news things come through, and unusual selling pressure. So maybe there's no explanation for that other than just unusual pre-earnings positioning. Like clearly this is Microsoft Day. It's Microsoft and Google, I think. But there could be another way we look at the rule and saying that if connecting the two, it looks like if you do touch the lower band when you shouldn't, that it eliminates the desire for that to go to the bull zone anyways. You're looking for clues that the stocks are moving first or the index is moving first. So if the stocks are in the bull zone and index is in bear zone, they need to connect somewhere, maybe in the middle. Maybe the index catches up all the way, the stocks sell off all the way, and you have to look for clues. In a rational market, the index trails the stocks almost every single time. This is the one time, the almost every single time. Well, there's sometimes it probably doesn't. This is that time. What can we learn from that, right? So in this particular example, I'm expecting us to float here and make our way at least there with steps along the way of res eventually going positive, et cetera, to get it all happen. And you're gonna have that resistance of the hedge pressure break. It's gonna make it hard as well. So as we get here, it touches the band, which is it's the thing that it shouldn't do that. And the fact that it did is an early warning sign an early warning sign of just thin market and unusual pressure. So again, we don't have a rule for this, but this was early warning to me. So the rule is I did buy with a sight for bull zone because of this rule, but anytime you break through DD band, markets are irrational anyways. So this rule typically holds in irrational markets. It's not like ungodly, like massively always going to work when irrational, but it still is more often than not. So when rational markets happen, it's like always wants to go there as long as you don't become irrational. So when you touch that band, it's an early warning sign, DD band touch. Markets just become irrational. So is that trade still possible? The answer is it's still more probable than it's not, but the confidence is really low. So the idea is that if we don't have irrational, this is where I'm leaning towards this, irrational and DD band break. But the other rules, the equities rules, if those are all green and it touches the band, it's an early warning sign not to use the equities rule, which is going to bull zone. So the bull zone side is the equities rule of things. The band side is the futures rule of things. So DD has a connection to both the futures and the equities. And this is how it all ties together. Sometimes the equities give you the hint. Sometimes futures give you the hint. So traditionally, when we see all of these lights green or not red on a break to the downside, that lower band does not want to touch. And the fact that they're green and it did was an early warning sign of potential selling pressure, right? So the rule I'm leaning towards is if these lights are green and you do touch that band, you probably shouldn't use this for that on the equity side. The futures are now proving that this rule is losing its confidence. Now, if these were already irrational, like you hedge pressure break to the downside, already would not expect us to float on here, because it takes a rational market to do that. And rational just means the index will track the stocks. So you're expecting the index to catch up. But when the markets are irrational, it's kind of a coin flip as to which one moves first. And as you see, while the index is trying to catch up, the stocks themselves started selling off. So while the stocks are up here, index is down here, the index started catching up and the stocks started selling off, which yanked the index down with it. That's the rarer case. So in irrational markets, things behave random, backwards, weird, but the early warning sign had me get out of the way of potential further selling, right? GD is done manually on Rocket Scooter. We have an automation for it for Thinkorswim or for TradingView. We don't have futures data yet inside of Rocket Scooter to power it, but we're getting that. We're working on that now. To get that into the platform for you guys. So I manually draw it. If you have Pro Plus in Rocket Scooter, there's a channel in Discord that they convert them for you. But in the futures, it's plus or minus 1 risk interval from the close. And there's a video on how to do it manually. So Apple breaking hedge pressure, that was a part of the trigger of this. And like I said, I'm glad I'm safely on the sidelines. I do like the idea that if you touch the band, that's an early warning sign to eliminate that as a qualifier. We've never seen it happen before. Because it takes weird, unusual selling to create that push. It doesn't want to touch. As you see, it tried its hardest to float there. And that's what we'd expected, right? We all expected that. So today is, like I said, today's big earnings. Today we had a couple surprise news events. It's not just a regular arbitrary day. There's real reason for this selling to be here, and it's probably just pre-earnings profit taking. So it's not completely unexplainable. The behavior is random, of course, but people just likely probably sold to get out of the way of earnings. And the fact that we did touch that lower band could have been that early warning sign that this was a rule that we can get away from. So we need to watch if this, like I said, it's so rare to see this happen. It's hard to make a rule because we won't have another repeatable instance, but we'll have to remember this because this is irrational when you do touch the lower band and break it. In irrational territory, as far as equity side goes, I always still take the DD bet to bull zone. But irrational futures, it may be that if this is the sign of the irrational trigger, the DD band break, then we eliminate the bull zone rule. Like futures is a early warning sign that equities are not going to lead the pack and the index is going to catch up. This is an early warning sign that the futures themselves, or the index itself, is getting squeezed first. And like I said, all morning long, we're all saying, gosh, that's unusual volume in futures. That's just weird, right? And so this could be very well be that. This is not hedging or shorting or selling in futures. Like this unusual candle could mean that the index is leading the stocks, which is the rare case. Very rare. It's almost never that happens. So you're getting squeezed out of, normally your big volume is less than the open. Your volume decays. You never really have massive catalytic volumes, like the middle of the day volume. Here's a day where you had, again, like unusual selling pressure higher than the open, and it just kills the market for the day. And it's just unusual to see that amount of selling pressure unprovoked. And also, just in general, this is a very light open as well. 10,000 contracts is actually pretty small. Typically, it just depends on, most market days. Your 20 to 30 is pretty normal for a big day. This has just been such a light market. 10 or less this is very thin. Some of the lowest volume days we've seen in a while. That could just be it. Like the market's just got no liquidity. Even though the commander traders is showing it's becoming more liquid. I think it's just no liquidity leading into earnings. I think the movement is shorts getting squeezed, and I think they're pretty stable. And longs that bought, they're long and sitting, so it'll just be it's one of those weird cases. But I think I'm gonna propose that as a possible rule. What do you guys think? The yellow and white resilience line. Oh, the white resilience line is a tiebreaker at half cap. The yellow resilience line is a tiebreaker at monthly hedge pressure. So if you're interacting with monthly hedge pressure and you want to see is the S&P going to break or bounce, you consult this to see if the stocks themselves are breaking or bouncing, and that's basically it. This is sensitive around monthly hedge pressure. So right now it's not used, but if you were at a monthly hedge, you would. This is my tiebreaker for that. If the S&P is like collapsing and falling right here and monthly hedge is still positive, then I'm more likely to take the bounce. Louis says you like that as a caution. Because a lot of the time, it's rare that the futures will lead the stocks. It's very rare. But this could just be people getting squeezed out of the index as well. So it's cool. Got out quick. I like it. All right, so that's good. Took a tiny little loss, got out of the way. Good deal. This could be one of those really nasty days, so I'm glad that I am not exposed to this. But knowing that that was already kind of an early warning sign, and seeing that, I got out of the way. If you learn how to fall without breaking your neck, that's how you become an acrobat. You don't become an acrobat by always doing a backflip and getting it right. Because if the one time you slip and break your neck, your career is over. So if you can fall without hurting yourself, that's the real mastery of your sport. Okay, I'm out of here. Go to the airport. Love you guys. The art of trading is taking small controlled losses, knowing when to fold, getting out of the way when you're wrong, and letting yourself bet accordingly when you're right. It's been a fun day. Got a little weird pre-earnings stuff. Don't like it. Don't like what I see. It's gonna be a really nasty day today. I'm glad I'm out of the way. I teach you these skills here at Rocket Scooter. Teach you everything you need to know, how to navigate our platform and use our style. We have a ton of videos, video courses. Make sure you go through, watch them all, and take notes. You're going to learn so much in those courses. I promise. Check out that extended trial, you guys. Y'all have a good day. And we will see y'all later. I got to run to the airport. I'll see y'all later. Hit that like button on the way out. Thank you.